Good morning and welcome to the Early Bird Report. Here we're looking at the Dow Jones on a 30-minute chart, and last night they came to an agreement of raising the ceiling by 3.7 trillion, and also IBM had good reporting figures coming in as well. So we've seen this strong push up. We're kind of expecting it in around this sort of region here, the 2-4, and we've got the bounce off the 2-3 here, the top of minor group 1. It's important. And now we're back above the 12.5 here, and being above the 12.5 here flips the market from being in a bearish buyer scene to a positive long scene. So we need to, as traders, we need to follow the market, and that's what we're going to do. So we've had our A and our B and our C coming down to here, and we knew that coming down through here somewhere that would be seeing a bounce and a move up, and within that, the idea was that once we found 12,500 here as support, and on our local market we'd want 4,500 to become support, and that support would give us reasoning and rationale for us to flip sides and follow the market to the upside. So that means covering shorts and moving in to longs, and we can do that in a fair and adjustable way, and we'll be doing that. So we do have a little bit of time up our sleeve, and what I mean by that is that this particular move up through here, in counting this structure up here, we can see that it's in 5 waves. What we can recognize in using LEDs, we can see this strong surge in the middle here. That's the 3rd wave, and that's where most of the volume comes in. So essentially what we've got here is we've got up for 1 and back for 2, up for 3, back for 4 and up for 5 here. Be finishing somewhere up in here, splitting hairs. 12.6 is pretty good for that. Old highs here, the resistance. So we've got a wave structure of 5 waves in here, which 5 waves is an impulse wave. So then we should see an A and a B and a C correction come back. So a three wave swing in terms of an A, a B and a C wave coming back here, and it can pull back 61.8% of this. So if this is wave 1 here, we can see a 61.8 retracement level coming back. However, let's just work with just below the 12.5 at this stage here. So let's see this A, B and C coming back. Once that's complete, then we should see a push to the upside. So we could be going long today in a lot of cases, but then we'll see the US markets come softer in this ABC correction through here. I could be sort of wrong here. We may get a push a bit further up here, and we'll get the ABC across the 6 here and then move up. I don't think that's the case. However, well, that's a general sort of picture anyway. So just want to check on the S&P 500 actually while we're here. That's all right, I can come back to that, I think. Right, here we are here. So this is, it'd be easier to count. This is the sort of futures market, it'd be easier to count on the actual index itself. But looking at the 5th wave coming up through here, we can see that we've got the 1, the 2, the strong 3rd here, and the 4th and the 5th here. So there may be a little push up here on the S&P 500, but essentially we'll be looking for 61.8 retracement back. But I think we'll just start looking at 13.10 here as sort of tops. But anyway, a pullback through here and then a push further to the upside. Our local markets will be the same as well when we're looking at a futures market here. Yesterday we were looking for a low. I haven't sort of fixed this up down here, but thought we may have another little push down through here, but that's not the case. So we're moving up from here. So what we want to see on our local market here is over the next couple of sessions is we'll see the cash market push up, and this should pull pull the futures market up a little bit as well. So we should see basically 5 waves up to here somewhere, then an A and a B and a C, some sort of correction across the 4-5 there. Once that's in play there, then we should see a push higher for that. How high will it go is a good question, and I think we just need to take that step by step when we're looking at the cash market here. We'll be looking for this in terms here. We've got, this is the XJO up for 1, ABC for 2 here. So we'll be looking for a third wave up through here, moving up quite strong, but we want to get a support come back on the 4-5 here. This is our support area here. Once we've got that, then we can move up. Now, we have been talking about covering our short positions here, coming down through here. When I put in the robo positions out there, I just need to follow the stock standard way of doing things. But as I mentioned yesterday, that you know, you need to make decisions for yourself, and covering covering sort of earlier and protecting those profits is always a nice way to go. But I'll look through those short positions this morning. Some will exit on open, others will logically move the stops down, depending on what sector we're looking at and what markets that we're looking at within those sectors. So we'll find, we won't get it perfect, but we'll find a nice balance on all of that. But look, on the long side, I have put stocks out in the trading level section, and we'll be working on those to be long on in at. So how far will this rally back up here? If we look on a daily chart here, for instance, this is the US markets from here. So just why we're here as well is that there's a couple of ways to look at all of this, but one of our original ways was looking at 5 waves up like this. So that's what we're going to be looking at as well. So we'll be looking at that in terms of a 1, 2, 3, 4, 5 going up through there. So we'll be looking for 5 waves going up. Now, those 5 waves going up, last night we got wave 1 and wave 2. So we'll be looking for something like that. So we've got that wave 1 and that wave 2. So we'll be looking for somewhere up here. I'm using the 13,000 here, the major trading level there, as a target. But I also know that the 12,720, the 12,772 and the 12,8, all of those have really strong resistance points there. But one of the normal things to do, or I don't know if it's normal, but what I do is I take that distance from the top there, bring that down to the bottom there, just to get wave structure and proportion and ratio. And the 1618 here would leave us at this point up through here. So that's one thing that I normally sort of look at to do so. We'll look at this area up here, but we'll follow the wave structure up there. So in saying that, what I'm sort of trying to point out here is that if last night we got wave 1 here, and then we're going to be coming back for wave 2 here, wave 2 may be shallow or deep, it depends. So then we've got, if that was 1 day, this could be 1 day, this could be 1 or 2 days, this could be 1 or 2 days, and this could be 1 or 2 days. So that's sort of what we're looking at there in that thing as a time structure. So having that in mind, and that target and resistance across the top here, then we can look at our local market in terms of that. Just bear with me here. XJO. So one of the things that sort of interested me here was simply this little gap in here, because I know that the SPY doesn't leave gaps anywhere, and I would imagine the XJO doesn't leave gaps either. So that gap there is certainly a target that we'll be sort of looking for. However, we need to get past a particular point in time here, and what that is here is that this here was a 3-wave correction. Okay, it could be anyway, this, because of this particular 3-wave correction and this 5-wave structure down, we have to get past this 5 waves that we've had down through here. So when we're looking at this here in terms of this here, the 61.8 retracement level here. So if we say this as subgroup 2, the 5776 here, so that would be the 4572 and the 72 and the 80. So subgroup 2 in here. We need to see this market above this. If that's the case, then this top can be taken out, and then we can view this situation over here. But while this 5-wave structure is down here, in terms of 5 waves down through here, we need to remove the possibility of having 3 waves back up to the 61.8% mark, and then a larger trend to the downside. Okay, so we need to rule out this possibility here. So in ruling out that possibility there, it just takes time to do that. There's a couple of important things here that we need to look at. One of them is obviously the 4-5 here. So finding support on the 4-5 is step 1. Step 2 is the midpoint here, which is the 45.50 here. Okay, and this brings us up quite close to the 50 and the 61.8 retracement level. So we'll be looking for support on the 45.50. Now, once we've got support there will be a reaction once we get there and all the rest of it. But once we get there, we want to have a look at the wave structure that got us there, and we also want to have a look at the support that could be developing there, and we also need to have a look at what's occurring in other markets around the world at that point there. But I just want to point out that this 3-wave structure is a risk point, and our local markets will be following this particular structure, because we can have this structure here, or we can have this 5-wave structure here. But as you can see, this first leg and this leg here are the same as this here. So the internal structures within them are going to be the same. So in this little leg here and this little leg here, there's going to be this little 5-wave structure here. So that little 5-wave structure will be there, and it will be there. And then we'll have this 3-wave structure back. So it's not going to make sort of any difference in terms of structure for a little while, that little 3 waves in there and that little 3 waves there. So it's going to be the same. So we're not going to get any clearance from the actual structure within this. So we'll have to look towards other markets, such as our currency and base metals, the S&P 500, of course, and the euro as well, and some of the other markets like the Dow Transports and so forth. So anyway, this is a bit of a point of contention here. But as traders, what we need to do, we need to, we understood this is slowing down through here. We understand that we're going to have a bounce back up through here. We don't know how far it's going to go, but if it is going to trend, and it could just, continue for quite some time, and if that is going to be the case, well, that's great, but we don't know that. But what we do need to do is we need to position ourselves on the right side of the market at the right time. And we talked about being short down through here. We've done okay down through here. We talked about covering short positions down here, started to look at getting into long positions around here, and that's what we'll do. Now, we don't know how far it's going to go, but if it's going to trend, we're going to be on it. That's all that we can say, and we need to minimize our risk and protect our capital. So any moves to the inside through here on our way up here, in case we do get this structure here, we need to protect ourselves. So it's a very good idea to have at least small positions in this first little leg here until we've got support on the 4-5 here. Okay, and each stock out there will be treated individually as well. So we'll look at that. Just want to point out the risk and how to go about sort of handling that. So support on the 4-5 is critical. Support on the 12,500 for the Dow Jones is also critical as well. But because we've got that 5-wave structure to the upside here on the S&P 500, it does give us a situation where we can have this 5 waves, a correction, and then another 5 waves, like a large ABC correction, but we should see a larger push from that point anyway. So all good news. While we're in this charting system here, we can have a look at some of the drivers. This is gold here, and at the 1600 here, We understood in Elliott terms that we're at the top of a third wave, so we're seeing a fourth wave unfold, and the fourth wave will come back and check into this area here. The fourth wave normally pulls back to the fourth wave of one lesser degree. So this is the previous fourth wave, and that would have been a fifth wave, and this is the top of a third, and this would be the fourth. So we can expect it to come down to this point through here, and we'll be looking at 5 waves. So we'll look at an A and a B and a C wave coming back through here, and then a push to the upside through there. And we'll also need to take in consideration of what's happening in stock and also in the US dollar index as well. Now, on the positive side here, we've got copper here. And as you can see here, it's got quite a nice structure sitting on the 440 here. We were looking at this being a top of a third here. We're looking for a correction. The correction may even just be in here, because this does look like a 5-wave structure to here, a 3-wave structure to here, positive structure to here, corrective structure to here, positive structure here. So we're seeing this is still building to the upside. We could look at it as up for 1, back for 2, up for 1, back for 2, and then going into the third wave. So the 1, the 2, the third wave up into here, a fourth wave across the 450, and then pushing up further still. I've always maintained that this has been one of the leading elements in the market, and one of the driving factors when we look at the Shanghai market and the Indian market as well. So a lot of these base metal stocks that have been oversold will bounce back quite quickly. They just needed the general stock market to be on their side there. They need a catalyst, and that catalyst of the debt ceiling raising is the fundamental financial catalyst for that. But the steady, sturdy driving side of it was coming from the base metals, and we understood that, and now that's coming into play. And of course, if stock is moving up, we're going to see oil moving up. So just going into the futures market here, bear with me. So this is the pattern for stock on oil on a 2-hour chart here. So you can see that it's forming or narrowing into a balance point there in some sort of triangle sort of pattern. So that will push to the upside. But what we did recognize is the other day is we recognized that we had a 3-wave structure in this pattern here. So that would create eventually a move to the upside, taking these highs out here. But as you know, the 100 is going to offer really good resistance, and that will continue to struggle to the upside there. And this is sort of it here. We were talking about this 3-wave pattern here. Of course, this would be some sort of A, B, and a C to here, and a push up through here. So look, once we've got support on the 98 here, we'll get a push a bit higher, and then we'll have a reaction, an A and a B and a C coming back, and then a push up. So we can look at 5 waves up, a bit like the Dow here, in terms of 1, 2, 3, 4, and 5 perhaps. Some sort of A, B, C into here, and then a push up higher through here. So those oil stocks that were going to the downside, like Woodside, can see them slowing down today. And some of the ones that were ready to sort of push to the upside, OSH sort of comes to mind a little bit, but I'd need to double check on that. Start seeing some strength come in there. Okay. Currencies. So first of all, the US dollar index. The US dollar index is still struggling at the 76 here. While it's struggling at the 76 here, pushing down, would end up seeing the euro push to the upside. So we'll see how that goes. This here should take out this low here, but there's a robust support at 75 here for the US dollar index. So we'll see how we go with that. So realistically, once this price here gets stuck under here, if that is going to be the case, then the euro would really sort of push up, and so would stock as well. So we're using the wave count on the Dow Jones and the S&P 500 as sort of a leading this way, because this one's not leading at this stage here. So let's see how we go with that. But the flip side to this is looking at the euro push to the upside through here. So what we're seeing here as well, and you'll see this on the charts later, is up for wave one here in terms of up for one here, an A and a B and a C here is an expanded flat, up for the third, back for the fourth, and up for the fifth. Then an A, B, and a C here. Okay, so now we're pushing up from the 141 level. Yeah, so on the euro on the 5 minutes here. Right. Let's see. So what we'd be looking at today through here is you'll be looking at support in here. So you just got to, I've got all the levels messed up in here. So 14150 is one of the main points here that you'd be working off. And the other one here would be the, if I could just, 14130. Okay, that's the support area there. So once you get support sitting on the 14150, then you can move to the upside. So while that's hitting up through here above resistance here, there's going to be trouble. So make sure you got good support on the midpoint here, the 14150, and take it from there. And you know that you're going to be up against some strong resistance here at subgroup 2 here. So you either need to take profit and wait until you've got support on the 72 and then move back in from there, or just be in the market and allow yourself for this to flicker around and stand back and give it space to move there. Yeah, but that should push up based on the S&P 500 structure. The same for our local market, the Australian dollar here, and with the Australian dollar here, as you know, yesterday we were looking for we're looking at this as an A and a B and a C wave to here, and now we're looking for this top to be taken out here at 108 and eventually move up to 109 and 110. If it could move up to 110, that's great, because it'll give it a double top at the old high, and double tops are never the end of a bull campaign, so that's a leading indicator for us. So yesterday we noticed down through here that we had on the chart, we had 5 waves going up through here, so we're waiting for a pullback into here and as an ABC correction, and then scaling in through subgroup 1, 10, 20, and 30. So if you're fortunate enough to be long in there and you're still long in there, then of course you can do what you want, but we'd expect higher prices to come. But also within saying that, there's a lot of resistance between 107 and 108 here with all this here. Okay, so it's not going to be a beautiful picture getting through here. So we'd be looking at 5 waves in terms of 1, 2, getting basically to 5 waves up here somewhere, and then a correction back, and then a move up through there. So it's not going to be easy on the 5-minute chart. It might be a bit of a different view here. So look, what I was sort of suggesting is that we can see an ABC correction back into the 107 here in terms of down for 1, an A and a B and a C wave coming back through here. Just generally a bigger correction through here in 3 waves. Now, that could happen, and if it does, then that's fine. But this number here, the 107, just a little 72 number here, but in terms of 107.20, so we're in subgroup 1 here, 10, 20, and 30. So this is the center point in here, but it's a 72 number, so we'll have good support anyway. So while you're above here, then you need to be long. If it's under here, then it's likely that we're going to have that larger ABC correction here. Now, if support is found on top of group 1 here, subgroup 1, and this is with any group 1, if support is found on here, then it separates itself from the closest largest number, and the 107 from this point here. But as you can see, it's not just enough to trade up through top of subgroup 1. It's the retest that's more important. Yes, the breakout is part of it, but the retest is more. So we would see if it was going to push up through here, then we'd see it push up and then we'd see it come back again. Okay, so there would be some flickering across here, but if support was found and you got patience and you recognize what support is after a sort of a test like this here, then getting back up and getting on there and then moving up from that point, that's what you'd be looking for there, and then that would take you higher from that point there. So it's really about, will the market come back and have a correction here, or will it find support on 30, top of group 1, and push up from there? So this is where you need to lay your bets down in and assess the risk factor within all of that. But I can say to you that, you know, if this is the line in the sand, if the market's under this, then you don't want to be having any longs in the market at that stage, because you'll be pulled back into a larger correction here. Okay, so I think that's it. In a bit of a nutshell here, the ASX 200, we're looking for 1, 2, 3, 4, and 5, then an A and a B and a C back to here, and looking for support on the 4, 5 here. If that develops, which it should do, then we'll be looking for further upside there. Then it's about the 45.50 here. So somehow we need to make a transition from short to long, and that's what we've been working on, and that's what we need to do. We don't know how far it's going to trend, but we need to be positioned, not over trading, but small positions in there on the long side, and assessing the wave structure as we go, and adding as we go as well. So robos on the daily charts and using the levels, and then next Monday we can have a look at using weekly charts to go long as well. So anyway, it's about protecting profits, and we'll see how we go with support here. Good morning and good luck.